Climbing over 200% over the last few weeks, the new darling of the altcoin investing world, MATIC, has lost the majority of its market cap in just a few hours today, leading many in the crypto community to brandish their pitchforks and go screaming into the streets for the heads of the foundation of MATIC and Binance, CZ himself. They want their heads on platters. But are they right to look for somebody to blame, or are these just the signs of an immature market? Meanwhile, Bitcoin bulls are getting excited for a potential push to the upside, but do the charts agree with them? We give you guys an update on Ethereum's hard fork, and we talk about the recovered Dash masternode funds that we previously reported on. All this and more in today's exciting episode of Breaking Bitcoin.
I'm Cap.
I'm Karloff.
And we're with Particle.io, and this is Breaking Bitcoin.
This is Breaking Bitcoin. Hey guys, welcome back to another exciting episode of Breaking Bitcoin, recorded live here in the studio. It is Tuesday, December the 10th, 2019, foul year of our Lord. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from, whether that is YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. If you want to support the show, if you like what we're doing here, make sure to subscribe on the YouTube channel, leave us a thumbs up, comment down below if you've learned anything today. We'll be doing something fun with that later on. And over on Twitch and DLive, make sure to give us a follow. We've got a fantastic show for you guys today. I don't even know where to start. We're going to be talking, obviously, about today's technical analysis and giving you guys an update on what's going on in the space. Make sure to comment, chime in the live chat. Let us know you're alive. Let us know how you're doing. Let us know what you're doing on this glorious day in crypto. A little cold out here where I am. It's been pretty tame here, honestly, with the winter cold snaps. But all of a sudden, as of yesterday, it's like mini blizzard came in, and now we're right back in the heartland of the cold Christmas weather. Might have a white Christmas after all. Moving right along, guys. As I said, we've got a fantastic show for you guys today. Let's see here. Before we begin, of course, if you guys would like to improve your technical analysis, if you guys would like to trade along with us, if you guys would like to receive mentorship from our analysts and enroll in the Pathways to Profit course and learn how to build your own technical strategy, make sure to check out what we're doing at premium.crackingcryptocurrency.com or hop in our Discord, discord.crackingcryptocurrency.com to keep up to date with our community. Moving right along. Also, website Discord integration is complete. Shout out to all the premium members. A lot of you guys have already gone and logged into the website. Make sure that you do need to do that by this weekend so that you don't experience any interruptions in your service, either to the educational content that we host or to the premium Discord, the analysis and signals channels, or to your indicator access. Our team is currently reaching out to all of the members individually who have not signed up to help you guys through the process. If you guys need any help, of course, if you guys happen to be AWOL, that means you're probably not seeing this video. If you're doing something in life and you're just not actively trading at the moment, when you come back, as soon as you log in, all your permissions will be restored from the date that they were cut off. So don't worry about anything like that. Just want to make sure that we get everybody on the new database so that we can handle everything as efficiently as possible. The next Crypto Currently interview with Silvio Macaulay, I will hopefully be able to publish tomorrow. Off to a little bit of a rocky start, but they should be coming out very smoothly after this. Thank you guys for your patience. With that being said, I want to give a big shout out to Friday's crypto comment giveaway winner, Crypto Elf, and of course, as we do every single day on this channel, we're gonna give away some free crypto, guys, to a random YouTube commenter. We're gonna be doing something differently this time, though. Previously, we've been just picking a random YouTube commenter. I'd like to do something a little funner, though. What I'd like you guys to do is I would like you guys, after the show, after you've watched the show, comment down below what you think the price of Bitcoin will be at tonight's daily close. So whatever day you're watching this, if you're watching this after the live stream, what will the price close at tonight at midnight UTC? And whoever gets the closest guess will win the crypto comment giveaway. So hopefully we can find out some Nostradamuses out there. And if we find people who are consistently guessing the price of Bitcoin, you might have a job. All right. Anyways, guys, with that being said, let's go give away some crypto. Thanks to this month's continued crypto comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out at spectresecurity.io for all your security needs. Let's get going, guys. All right, here we are at the random YouTube comment picker. We're going to load comments for Friday's video, which was the bank coins cometh, new scare tactics from regulators. Is Bitcoin a stable coin? One of my favorite shows that we've done recently. Hopefully you guys really like it. We're randomly going to pick a winner. And it is Rickie Thompson, my good friend, RT in the house. He says the market is starting to show from these pumps and dumps that there are very few altcoins that are going to survive as they just keep finding new lows. When are people going to realize it's a lost cause and give up? I have a feeling Bitcoin needs to capitulate to clean up this market. I hope people sell before this happens, as enough blood has been spilled. Well said, my friend. Well said. Get a hold of me in the Discord and I will gladly tip you some crypto. And thank you for your continued support, my good friend. To the live scene. All right, so here we are in today's daily market. We've got some... Whoa, what is going on with this shenanigans? Okay, good. I just closed this, and that all looks quite good. All right. Let me know how you guys are. Rickie T, that's me. Congratulations, guys. All right. Price, end of day, 68.54, says Michael B1000. That is going to make the shorters very, very, very happy. All right, so let's go over to today's analysis. And to do that, there's a lot I want to talk about. Obviously, we didn't do the show yesterday. Apologies, guys. Part of being a father is that life and family come first at times. So thank you guys for your patience. Hopefully you guys are enjoying the new breaking Bitcoin bits that we're putting out every evening. But enough words have been wasted without talk of today's technical analysis. So we're going to look at a few things first. The first thing we're going to do, as we normally do, is we're going to go over and look at the daily. This is actually the longs to shorts ratio. Where did I have that daily pulled open? I guess just right here. Okay. So we'll go over and look at Bitcoin on the daily, on the Coinbasers, and we will minimize this. We will also bring up the current baseline that I am utilizing. Of course, make sure to modify this for whatever particular strategy that you guys are doing. For those of you who are familiar with PTP. All right, so let's talk about a few things right here. Obviously, let's just kind of zoom out a little bit. We're going to do that here in a second when we look at the weekly close, because we always do. I always like to do the weekly analysis on Mondays and then kind of leading into the weekend. Weekly close was not good. We'll talk about that here in just a second. But looking at the current structure of the daily candle, of what we've been seeing here on the daily. We haven't broken out of this consolidation range that Bitcoin is in. This is often what Bitcoin does after a long walk to the downside or a long walk to the upside. Often it does feel like the movements after a long walk to the upside, it does feel like the movements down often tend to be more pronounced. Of course, there might be a slight variance here because we do have to realize that this was off the heels of a 3.5 month long bull run. So the sell-off is always going to be quite dramatic in the market that Bitcoin is, which relative to other assets is going to be relatively illiquid. So these volatile moves are to be expected, and that's why we're here. We're here for the volatility. At least I am anyways. Maybe you guys are here for the memes. Anyways, so on the daily yesterday, we did end up closing below the baseline. That would have been a one conf, but it's not actually a conf. I do not recommend people taking trades just based off baseline closures. That's what your indicators are there to do. Now, today's daily close is interesting because we are going to be getting a 2 confirmation setup. We do see that Minx is crossing and closing below the noise line. It's a proprietary indicator. You guys are very familiar with it, those who regularly watch this channel. It is often quite right most of the time. Also, we are additionally closing below the baseline. So we do have confirmation there. We have a 2, that would be a 2 confirmation short. So for those of you familiar, we've talked about 1 of 3, 2 of 3, 3 of 3, 4 of 4. Haven't brought that kind of language back for a while, but because I am going to be putting out that Pathways to Profit module here over the next few weeks. Module 5 will actually be coming out this week, fully covering the baseline. Next week, we're going to be talking about continuations and 1 of 3s, 2 of 3s, 3 of 3s, discretionary position sizing, and all those concepts. So we're about done. We're about completely done with that. Then we'll be moving into lower time frame trading. Then we'll be moving into price action. And we're going to be doing all of that, focusing on that, as well as our automated strategies over the course of 2020. So don't go anywhere, guys. There's nothing but upwards and above. I'm working with a fantastic team of devs, and it's really exciting to be building what we're actually building out for our traders and for our community. So stay tuned for all of that. Anyways, so 2 confirmation. So how many indicators do we have on our chart? 1, 2. So we have initiator, confirmer, baseline, volatility filter. That's 4, right? That's 4. So you have 4 of 4, right? 4 of 4, fully confirmed, full risk trade. And then if you're implying your discretionary position sizing, which I've gone over many, many times on the stream, which I've gone over in the VIP Ask Me Anythings, and which I will be going over in full course material here over the next few weeks, that that is your element of discretionary position sizing. So if you have 2 of 4, which is your bare minimum that you need, you can do something like a 1% trade. If you have 3 of 4, you can do something like a 2% trade. If you have 4 of 4, all cylinders are firing. That's a full risk position. Now, you can scale this down. What if your max risk per trade is something like 2%? Well, then you'd be scaling that down more. So maybe a 2 conf is a 0.5% risk or a 0.75% risk. And your 3 of 4 is going to be something like a 1 to 1.5. And then your full risk, your 4 of 4 is a 2%. That's fine. You can scale these numbers down just as long as they're consistent and you're executing every single day when you get a signal. So 2 of 4. Now, I am inclined to quite like this signal because I am still, and I've been very consistent on this throughout the last several weeks, we are in a macro bearish trend. I have a lot of conviction that we are going to see lower prices. There are a lot of things that I could say to justify this. Not only, I think probably the easiest is just to point out the structure, and I understand this is a fractal, and I'm not big fans of fractals. It's not, say what you will. And we're going to go over all of these kind of supporting concepts here in just a little bit. If we look at the 2019 bull run and compare it to the 2017 bull run, there is only a difference of magnitude. There's only a difference of magnitude. Overall structure is intact. Massive run up, significant sell off, period of distribution, and then collapse from that distribution. And then what I believe right here is what we're experiencing is, and it's funny because it's the exact same price level of 6K relatively that we need to hold as support. Now, if we hold that support for an extended period of time, I still believe that we're going to see the plunge. Of course, then the probabilities do start to increase that we could have found a local bottom. Of course, there will most likely at that point in time be a spring, which will still justify my overall idea. Now, can Bitcoin consolidate at this level for a long time? Actually, it can. We might be range bound for a long time. I do not know when the plunge will occur. I don't know. I'm sure there will be a catalyst of some sort. I'm sure the news will come out afterwards trying to justify that it was this that caused it, or is this that caused it, or is this that caused it. Relatively, all you need to know as a trader is to be positioned ahead of time and understand which way the market is statistically more likely to move, which for me is to the downside. We'll talk about all of that here in a little bit. Look for other reasons as well as that. So there's the fractal explanation. We'll look at the weekly close and the monthly explanation here shortly. Don't really need to revisit the monthly at this point in time because there's no new relevant data on that. But anyway, so on the daily, just looking at our trading system, my personal trading system, we are getting a 2 confirmation. So commodity channel index is not firing yet. Wattatar explosion is not firing yet. So we can begin scaling into a position potentially is one way to do it, or we can wait until we have all systems firing 2 conf. Now, keep in mind that you also probably at this point in time still want to be executing on your reversion to the mean strategy, right? Something like the 4-hour chart, utilizing ATR bands or Bollinger bands. Basically, you're still kind of in the mood. Bitcoin is still ranging. So you are still looking to buy every dip, short every top, because we are still range bound currently. Now, you do not need to apply that active strategy to what you're doing. That's absolutely fine, especially if you don't have one tested and ready to go, if you're still working on your trend following system. But just keep in mind that reversion to the mean when we are in a period of consolidation doesn't matter whether it's distribution or accumulation, is going to serve you well, and you're only generally going to be wrong one time, and that is the time when we actually break to the upside, and that is the time when you will increase the position size on your trend following trades, which you are still taking. But understand that when you're in this trend following system and you're continually trying to position to ahead of time for the breakout or breakdown, that those trades are often going to have small profits or small losses, and that's fine. That's why when you run just the trend following strategy and you run it through in your back test through a period of consolidation, you're often going to see your equity curve just stay flat at those areas. Now, a lot of individuals are going to recommend that you just don't trade there. I do not agree with that whatsoever. I do not think that you should stop trading in ranges with a trend following strategy. I think that you should incorporate a secondary strategy, reversion to the mean, which is going to offset that flat equity curve with a successful strategy, which will raise it slightly and keep you profitable while you're trading in a range. But you still need to be position sizing, because just as those reversion to the mean trades are compensating for the break even trend following strategy in a range, the trend following strategy is what's going to compensate for that one loss, probably a large loss, that relative to your position sizing. It's going to be a risk trade. So if it's a 2% loss, then if it's a 2% risk trade, then it'll be a 2% loss. That trend following strategy that you're consistently putting on is going to compensate for that stop loss on your reversion to the mean strategy when you actually do get the actual breakout. Okay, and you can filter all of this, of course, and justify all of this through your backtesting, which I highly recommend and require, actually, that all of you do. Don't just take my word for it. Go do the math. The math is kind of an acronym there. Go do the testing. Go test your concepts out in the market. Scott posted a great inspirational Twitter. I believe it was on Twitter. I think it's on TikTok. I think it's on a lot of places now. Where my quote from my market analysis to the members is: if you have a theory that you believe will generate profit in the market, you would be a fool essentially to just go assume that you're right. You need to validate that concept with backtesting. You need to validate that concept on historical data and see if your idea even makes sense. Because I see so many traders get excited with a strategy and they see somebody try it and they think that it works and they just jump into the market and start, throwing full risk trades on with this new strategy that they haven't tested, that they don't feel conviction in. And backtesting is required not only to know that you're right, not only to see the statistics of your strategy, but it's also required to gain conviction in what you're going to do, because every trading strategy is going to have periods of drawdown. You're going to have a losing period, and you have to know how to deal with that. And you won't be able to deal with that if you don't have conviction, right? Just like if you're in a relationship, every relationship is going to go through rocky periods. If you do not have conviction that you have a strong fundamental ground for your relationship, that the relationship is good for the long-term development of your soul and your mind and your heart, then the conviction to actually make it through the rocky periods of a relationship is not going to be very strong. And often this is where relationships fail, because people don't have the conviction that this is a good relationship worth saving. People get in, they're in the honeymoon phase, things are good, then things get bad, because every relationship has a bad period, just like every trading strategy has a losing period. And then you don't have the conviction that, no, I know the math, I know the statistics, I just need to stick this out. And then divorce rates spike and escalate because we don't teach ethics anymore to young children. Moving on. So let's go to the weekly. Analyze the weekly. A few things here. Obviously, what did the weekly experience here for my trading strategy? We had a correction. We had a bullish correction back to the baseline and a reversal baseline bounce, a sell off immediately from the area of the baseline. We touched the baseline and immediately sold off. Come on, guys. Talk about this stuff so much. And of course, we have, what do we have over here on the weekly? We have multiple cylinders firing. You had the powerful signal from Wadatar explosion over here on the 11th, the weekly candle that closed, that opened up on the 11th of November, 2019. So this would have been the weekly close of November 18th, 2019. You would have had minks below the noise line at that point in time. You've had commodity channel index below the dynamic zero line for a long period of time. So you've had multiple confirmation trades on this time frame. Now, pulling up our CC EMAs, which we talk about. Shoot. I had this all set up on my personal trading chart and didn't set it up for the stream. So just a second. We're going to go to indicators and strategies and type in cracking. And this is an indicator you guys can apply to your chart right now today. Go do it. I'll wait. And we're just going to make some adjustments. So we're going to be looking at the 100 and the 200 simple period moving average, and then all the rest of our moving averages as well. So I just want to point something very significant out, and we'll zoom out first, right? Now, what I'm actually going to do is I'm going to take Bitcoin's price off of here, and we're just going to look at the moving averages, right? And we are on the Coinbase chart. So I want to go and look, and I've talked about my baseline crossovers before. I get asked a lot about, golden crosses and death crosses. And I've commented on them ad nauseum and how I do not like to trade them because they're slow and they're often wrong, especially daily golden and death crosses. But what is rarely wrong, the weekly 13 and 55 exponential moving average crossovers and cross unders. Those are trend confirmation crossovers that are fast enough to get you into good trades, right? They confirm generally the midpoint and the continuation of whatever the previous trend is, right? Now, we had that back in 2016. We had the last 13 to 55 weekly exponential moving crossover led to a 2-year bull market. Then what did we have over here in roughly August of 2018? We had the 1355 weekly EMA cross under. And what did that lead to? The November sell-off, right? And then let's look at when we got the confirmed. To the upside, it was a little slow, right? Obviously, we were able to get in. We were long on March 31st, and we were able to catch the PTP daily long signal. That's why we trade the daily chart. But we do look at the weekly for trend analysis. The bullish trend was confirmed at the very beginning of May. The very beginning of it. It was actually at the very end of April when we got that next crossover to the upside. And what did that lead to? It led to a blow off top. Okay. So there was a lot of profit from the beginning of May till the blow off top in June. A lot of peak profit there to capture. Okay. What are we looking at again? Again, I don't have the price on here because I just want you guys to see the moving averages. What are we about to see right now? Here's the 13. The 13 is the orange moving average, and the silver is the 55. We're about to see the weekly cross under. Guys, we're about to see the weekly cross under. And that might take some time. That might take some time to happen. Okay. It's possible that we get something like this. As you can see here back here in August, we actually do cross under. We get the cross under, and then we just kind of drift very lazily sideways because price was redistributing quite ferociously. And then we had that massive plunge off. We have seen it before, although it'd be rare for Bitcoin, but it is possible because we see it in other assets. Where the 13, where we don't actually get the cross under, and the 13 just does hover above the 55 EMA. Again, I think that's likely as well because this redistribution period, I don't think will be as long as the one back in 2018. That one lasted about 3 months. This one, I don't think will last that long, maybe about a month and a half, and we've already been in here for almost 2 weeks now, so maybe another month is possible. But the whole point here is that you don't want to be sitting in the range unprepared. Again, I've talked about this before. While all of this is correct, and while we're trading under this posture, then every correction to the upside is an opportunity to get down. Every correction to the upside, which it is. It's not a pump, dude. It's not a pump. It's a correction to the upside. You should get short on that candle. Now, make sure this is germane with your own analysis. Don't run off and over-risk yourselves based on my word. You guys know me. I am what do I preach? Back testing. Do your own research. Do your own strategy building. I'm just letting you guys know my analysis of the market. But I feel very strenuously about this. There are so many idiots out there, in my opinion, calling for a pump to the moon, that this is the local bottom for Bitcoin. And I genuinely think that they are absolutely wrong. And I think that they're going to get people, and I think that they're going to hurt people because they don't know what they're talking about. They don't know how to zoom out and just look at macro trends. So I have my price target on here, 4,900. So we'll bring the chart back to be a little bit more accurate. Why am I seeing this? Regular, sorry. To be a little bit more accurate, that level's right around 4,900. It's actually a range from about 5,100 down to 4,900. And is it pinpoint precise? No point on the chart is. Absolutely not. No point on the chart is. But the point is, it is a general range of where I expect price to go. I don't really expect price to go a lot lower. Of course it can, because we do have pronounced volatility in Bitcoin. So we could see big sell candles much, much lower before a immediate buyback. And it's possible to descend lower. But that's where my mind and eyes are on. That's a 30% drop to the downside, guys. So I've taken steps. I've talked about this for weeks now, how I've taken steps to protect myself from this movement to the downside. If you guys need information on that, make sure to go watch my videos in the Trading Crypto 101 playlist here on YouTube about hedging, using futures to hedge, et cetera, et cetera, et cetera. I don't have any videos covering options. That is an option, but I generally don't recommend that, as I think that they're not as liquid, and that causes a lot of issues for volatility, especially if you're not using the correct capital to hedge your account. And then the next thing you know, you get a big wick, a scam wick, and then unfortunately you've smoked 30% of your account because you were using the wrong market to hedge your account. I really believe in using the much more highly liquid futures markets to short sell hedge. And I'm one of the only people, I think, I really am. I don't know of anybody else that actively talks about this as part of their active daily strategy. Like, hedging is such a part of my daily strategy because that's how the markets work. If you're holding Bitcoin, you're 1x long, meaning you'll lose 30% of your value. Now, I don't think that selling your Bitcoin, especially if you're a long-term believer in Bitcoin, is the right idea. But I think that it's foolish if you don't take steps to protect your capital. Like, you don't have to sit there and watch your dollar value get wiped away. You can use derivatives, you can use options, you can use contracts to protect yourself and preserve your dollar value and actually make money on the way down. So anyways, having said that, and of course, we've talked about the monthly sell signal before. We do have all cylinders firing on the previous monthly close, and we are continuing to see the sell-off off the backs of that. We had the powerful signal from Watertar Explosion. We had the Minx cross under, and of course, we had the commodity channel index under the dynamic zero line. Monthly sell signal, we have not seen that in quite a while. And the previous monthly signal, again, was on the candle that opened up month of May. So again, a little bit late for the monthly signal, of course, but what did it lead to? Blow off top. What does the monthly sell signal lead to? Blow off bottom. Blow off bottom, guys. Anyways, going to the 4 hour. Going to the 4 hour here on Bitcoin City. We did get a three confirmation short. Let's actually, yeah, three. So we had a 2 confirmation short here. We are, what's my time zone here? I am UTC. Let me change back to regular UTC. Regular UTC time, 2000 on the 8th of December, the candle that opened up on 2000. So you would have actually got the signal on the daily close of the 8th. So the open of the 9th. You could have taken a 4-hour, 2 confirmation. So 1% for me. Short to the downside here. You got the secondary confirmation over here on at 4 o'clock in the morning UTC time on the 9th. So actually at 8 o'clock, excuse me, because this candle opens at 4. So at 8 o'clock in the morning UTC time on the 9th, that's when you could have taken your 3 of 4 confirmation. So a 2% risk short. And then you had full confirmation, which is nice, on the close of this this scam wick candle, right? So you can see it pumps all the way to the upside, grabs liquidity, and then the market collapses. And the nice thing about the 4 hours is that you would have actually had to wait until the close of this candle to get short. So you would have completely missed that scam wick, and you would have had a great, fairly safe area to place your stop loss. A great, fairly safe area to place your stop loss because that area had already been rated. Right. So remember, this is a price action concept. But when we're talking about stop loss hunts and liquidation grabs, liquidity grabs and raids, et cetera, whatever terminology you're using, that all means the same. It just means it's market manipulation to grab liquidity and then move the market in the direction that it wants to go. So as we can see here, obviously, it was a liquidity grade, a stop loss hunt for shorts. And we see this cascading stop loss effect that led to this pronounced wick and was an excellent opportunity to get short. As we can see, great follow through on this price movement here. So once an area has already been rated, you can generally price action concept. You can set your stop loss there because it's already been rated. Liquidity's already been grabbed. So if price then moves back there, then your trade is invalidated. Your trade thesis that it was liquidity grab and price is going to move in the opposite direction. Your concept is generally considered invalid, right? And that's just a risk management concept, price action strategy. Anyways, so we're still sitting in that short. We don't have any exit signals yet on our short. I'm sure again from entering here or from here or entering here, you would be you would have already taken some profit. I'm sure. Let's pull up Quadriga ATR. Calculate our downside targets here. We'll just pull up in our short Quadriga ATR. From an entry here, you would have already nailed profit here. And from here, you would have already nailed profit here. And here on this wick, kind of waiting for that lower target of roughly 7,074, which I think is important when we go over and look at the 30-minute chart. And then this is pretty much going to be it. And then we're going to kind of flip over to news. So we're going to look at the 30-minute chart here. And we're going to look at the local range of Bitcoin here. And we're going to bring up VPVR. And we're going to look for our major areas. Now, where is Bitcoin at? Obviously, we are trading right in the median. This is a reversion of the mean strategy, guys. This is a great way to do it. VPVR, and you put on display developing value area. It's a good alternative to the Bollinger Bands. It's a good alternative to the ATR bands. And you are setting limit sell orders above those blue lines, limit buy orders below that level. And you just keep doing that over and over and over and over again. Meanwhile, you're still following your trend following strategy of putting those trades on to attempt to catch the trend. Those are going to result in small wins or small losses. It doesn't matter because your reversion to the mean strategy, which is running in the background, is keeping you profitable. Meanwhile, the moment that your reversion to the mean strategy does not become profitable because it gets stopped out because the trend has actually broken, your trend following trade is there to grab the backside of it and to compensate for that. And then you just let your trend following trade run, or you scale into it, or you scale out of it, whatever your strategy is for taking profit or risk management. But there are just good ways to do this with a little bit of nuance and a little bit of discipline, guys. Interestingly enough, we are kind of descending into that area where reversion to the mean is going to be germane. Lower band of this is about 71.27. We do have our last high volume node sitting down here around 70.85. My reversion to the mean strategy already filled 50% of my long order, so I am actually long in profit at this moment. I had an average fill. Let me pull up the ByBit app on my phone here. Okay. Got filled at 72.38. So actually just in a little bit of drawdown off this current movement. But I do have some bids down at that 70. 70.85. 70.85. Reversion to the mean strategy. But of course, simultaneously within my trend following strategy as well, which is profitable. All right, so sorry, I wanted to zoom out and just grab that, just note that LVN right there. All right, down around 70.85. And for those doing the extremes, you guys would want to have bids slightly below that, potentially in this low volume node area. Right? But again, I think that having a little bit of nuance and discretion, because again, right at the barrier has been pretty good entries, right? Has been pretty good entries. And you know, we're having less of a reactionary level here. This has become more of a stable range that we're trading in, because this is after the initial sell-off and the initial buyback, where we do have a little bit of increased volatility. That's worn itself out, and we are back in a normal traditional range now at this point in time. And we'll trade the range until it breaks. But again, overall, so just to sum up everything that I said there very, very quickly: monthly, weekly, daily, very, very bearish. Lower time frames, we're trading in a range, going down to the meso time frames. There was an active trend following short, which has been profitable for everybody who took that signal. The lower time frames, we're still trading a version of the mean strategy, which you guys can have, which you guys can automate or run in the background. Again, be careful with that. And as we sit right now, I would say to the trade right now on the table, like right this moment, is most likely the scalp to the upside, most likely a return to the point of control here, around 7,300, maybe even a movement up to 7,500, return to the top of the range here, which again is an opportunity to get down, to get short, and just rinse, wash, repeat, cycle, right? Potentially you'll also be getting a trend following trade breaking above that $7,300 area to take the trade to the upside as well. And I do want to point out that going to the daily, I guess the last thing that I want to talk about before we flip over to the news today, the last thing that I want to point out is the daily EMAs, and I want to pull back our daily EMAs, and I do want to point out where the daily secondary baseline is at. The daily 55 exponential moving average. Talked about the 55 so much. It's sitting at 80.71. So is it possible? I'm not going to rule this out. The daily short. Remember, it's not a full confirmation short. It's just a 2 of 4. But I do see a potential for us to get, if we're going to have a liquidity grab to the upside on the higher time frames here, then my target would be 80.71, right? 80.71, and that's actually where I do have some limit sell orders to get filled. Again, to take a fuller risk to the downside, right? I think that's a great place to be looking to get filled. Bounce back up to the 80, bounce back up to the 55 EMA. I think that's going to get a lot of people excited. A lot of people are going to get excited about a close above 7,900, and I think that's where all the liquidity is sitting. I think that's where people are going to get absolutely smoked. So keep that in mind as well. As you're position sizing for your daily trade setups. Now, currently as we sit for this current daily setup, that would actually be putting your stop around 77.67, and that's fine. Again, remember, reversion to the mean strategy, you're most likely going to be getting a 4-hour long to compensate for your daily short, but just make sure that you've done all the math to understand how all your pieces and components fit together, okay? But for those of you who are just keeping it simple right now, just trading the daily setups, you've most likely got, what you're looking at right now is a potential low risk trend confirmation, trend following short to the downside on today's daily close potentially. CCI might even be below. I doubt it. We'd have to get a little bit more of a pronounced sell-off, and then we might be actually below the qualifying line, which would invalidate the trade anyways because it extended too far, and then we were looking for a pullback. Lower time frames, scalping to the upside, and meso time frames, looking to most likely take profit on that short trade that would have been held open since around, I believe it would have been around like 7,400, right around that area on the 4-hour. All right. With that being said, guys, with that being said, I think after that analysis, I think it's a great opportunity for us to check in with junior analyst Midwest Attempts for today's Bitcoin weather report. Jason, what do you got for us today?
Too short or not too short? That is the question. Whether it is nobler in the mind to suffer the liquidations and stop losses of novice traders, or to take arms against this outrage with a 100x long, and in doing so, buy Lambos. To buy, to sell, no more. And by no more, we mean I don't know. buy Bitcoin. Back to you.
Eloquent in its brevity, Jason. Thank you. Thank you for that analysis. Now, you guys heard it here. All right, guys. With that being said, we've got a lot of news to cover today. So let's get the ball rolling for today's cryptocurrency segment. All right. So our first story of the day. Is, of course, going to be on MATIC, because this is where everybody's mind is at, and I want to cover this. I want to talk about this. I think before we actually get into the news, just so we know what we're talking about here, let's actually go over and just look at the MATIC chart. Oh, that's fucking ugly, man. Look at that baby right there. That is, oh my God, look at that. Woo! All right. Interestingly enough, looking at the 15-minute chart, anybody that bought the dip from peak to trough, right? 100x or 100, not 100x, 100%, 100x long, 100% in the matter of a couple hours, right? In the matter of a couple hours. And then anybody that bought that top down about 30%, again, in a matter of a couple hours. So keeping that in mind, let's get over and just cover what's going on, and then we'll kind of cover our thoughts on the TA of this. So the MATIC network token, MATIC is the ticker symbol, this news is buzzing across the crypto space. And this is following one of the most dramatic price fluctuations within a very short time span that we've seen here in crypto for quite a while, actually, to be quite honest. After climbing more than 200% over the last few weeks, MATIC has today, in a matter of hours, given back all of those gains, literally all of those gains. Now, Binance CEO CZ has, according to him, a team conducting an investigation, and he has publicly stated that the MATIC Foundation has nothing to do with the sell-off. In an official blog post, MATIC themselves, tweeted out that they have, and posted in their blog, explained why this price plunge was not their fault, citing allegations of token movements, But their claim is that all of these allegations that the MATIC Foundation moved a whole bunch of tokens to Binance prior to this, they say that this is nothing but FUD, and it is completely baseless. Now, in a later tweet, CZ did come out again and state that this price fluctuation was due to several large traders panicking and causing a process of cascading stop losses due to their large trades. Now, other traders on the crypto Twitter and in my personal circle have speculated that the sell-off was in part actually due to margin trading being offered on MATIC at Binance. So in September, Binance added MATIC to its list of margin exchange assets, with many now suggesting that offering leverage on an illiquid altcoin was very irresponsible and asking for this type of trouble. Of course, what the point here is that an individual could have opened up a very large short position on MATIC on the margin trading, and then gone with their holdings that they've held for a very long time and then massively dumped them. And this scenario does not seem insane. This is what any savvy trader would do. Now, according to recent reports, around 1.1 billion MATIC was for sale today on the order books as the dump accelerated. This accounts for a stunning 44% of the total market capitalization of this cryptocurrency posted for sale today in the order books. So 44% of the market cap on sale. Now, many took to Twitter to declare that this is a case of rampant whale manipulation. Again, I have comments on this because this is just what you get on exchanges and in markets where there are no safety systems. There's no traditional exchanges, for as corrupt as they are, for as corrupt as the traditional finance world is. Traditional exchanges have things like circuit breakers. Well, they just shut off exchanges when these cascading stop losses affect. They stop things like this. They have VWAP orders in place. They have market makers efficiently. And if things go bad, again, the circuit breakers go down. The circuit breakers flip. We don't have that, unfortunately, and I'm trying to be as generous as I can to people like Binance and all these exchanges because they've made us lots and lots and lots of money, and they're doing the best that they can with the current state of cryptocurrency. And again, you have a large portion of cryptocurrency you say who like it like this. They don't want regulation because with regulation comes all the BS, right? I mean, we've got it pretty sweet over here, and you just got to be savvy to make money in this market. But with that being said, this, of course, was caused by a large whale sell. So the question, did a large MATIC holder short the token on margin and then dump all of their holdings to force a cascading sell-off? Most likely, yes. That seems to make a lot of sense. It's what any savvy trader would do if they were allowed to. And again, doesn't seem to be anything illegal about this. Just sucks for the person on the wrong end of it. Now, the cascading losses on MATIC are said to have set off bots operating on Binance, causing many other altcoins to collapse as well. Coins like Harmony, Raven, Elrond, and so many others also experienced heavy losses despite having nothing to do with MATIC, except the fact that they were IEOs. Moving right along. Now, some are now calling for Binance to cease offering margin trading on coins like this, on low market cap altcoins such as MATIC, which are said to lack, quote, market maturity. And have large amounts of their supply in the hands of just a few entities. Now, while Binance blames the whales and market panic, others say Binance is responsible by offering whales the framework and opportunity to exploit the markets to their benefit on illiquid coins. Now, who is right really depends on your perspective. So I want to go over here and look at a few tweets. This is from Cantor and Clark, and he says, and again, comments that I agree with in part and disagree with in part. He says, no one needs to be behind the MATIC dump. People need a villain. The dump was the perfect example of the domino effect of staggered stop orders. Liquidity evaporates, and this is what you get. The stock market has flash crashes every so often. In crypto, it is the norm. People responding, can't we just stick to blaming CZ? Let's see here. Now, and again, he makes a very good point here that the crypto is not a normal market. It has no limit up or limit down. There's no circuit breakers, and certainly not much on part of the majority of investors besides hope. It went up because of FOMO, and it likely went down because of stop cascade. And from a structural standpoint, he is absolutely correct. There was another comment on here, which this is from BitMEX Donnie, and just the idea, and again, this doesn't directly contradict what Cantor and Clark said. In fact, this would actually prove or tend to lend credence to what he was saying. But here is a snapshot of the order book. It seems a screenshot of the order book from MATIC. And as we can see, just regular folks selling. Here's a 413 Bitcoin market sell order, a 123 Bitcoin market sell order, a 259 Bitcoin market sell order. Just regular folks, right? Just regular retail traders, of course. Just regular every average day folks. From Jacob Canfield, for new people after MATIC, and I think this is funny as well, you don't know dump until you bought Digibyte on the Minecraft rumor in 2017. You don't know dump until you bought Z Classic at $300 after John McAfee shilled Bitcoin private. And you don't know dump until you bought any delisted coin on Poloniex or Bittrex. So keep that in mind, guys. Mr. How to Survive in Crypto over here, a great point as well. It says here, this could become a nice example of what to do if a trade turns against you. And you guys are familiar with the situation. A trade looks very, very nice, suddenly turns against you, and now you're heavily underwater. How do you react? It's something most new traders don't handle well at all. And I agree with the sentiment in here that how you handle losers as a trader is probably the most deterministic factor to your long-term success. Everybody can, people struggle with taking wins. And of course, my strategy has helped a lot of people out. Taking 50% of your profit at a predetermined area, moving your stop loss to break even, and then trailing your trade as it goes. But again, panic selling, turning a trade into an investment. These are all mistakes that new traders make. And this happens when a trade doesn't go your way. And the first rule is always be prepared. Always have a stop loss area. Always have a level where you're going to be cutting your trade off, no matter what, no questions asked, and then stop looking at the chart. It doesn't matter if your stop loss gets hit and then price goes in your favor. People do that all the time, and they look at the charts and they think, if only I would have used a soft stop loss. That is going to lead to a loss of your discipline. If your strategy calls for a soft stop loss, that's fine. If your strategy calls for a hard stop loss, that's fine. Just implement it, always use it, and know that your system is going to give you more wins than losses over the long run, because you're always going to have losing streaks with the best trading strategy. So shout out to How to Survive in Crypto. He's got some good stuff over there. Make sure to go check him out on Twitter, guys. And account. Here's the tweet from MATIC saying that they had no role to play in all of this. As far as the token movements, they announced a release of 0.25% of their tokens as the October unlock, which coincides with aggregated outward movements. I would say that one thing that is interesting over here is a website that one of my analysts came across over the weekend, which we've been, which I think is pretty cool. This is whalesmind.com. And here we can actually see, so we just go to whalesmind.com, and it is free to use. If you want to see information for more than 14 days, you'd have to give a one-time donation. So again, not affiliated with them whatsoever, but they're doing pretty good work over here. So definitely work it. This is a great indicator that we can have in cryptocurrency that we just do not have with any other kind of asset or commodity out here. And if we go to MATIC, so this is Ethereum. This shows changes in the largest addresses over periods of time. So if we go to MATIC, we can see that over the last 7 days, they have moved, total holdings of whales have gone down almost 30%. And then if we kind of zoom in on this, we can see that the top address, which held 3% of the entire market cap of MATIC, we can see that 4 days ago, they unloaded about half of their holdings, and then as of today, unloaded all of them, right? So big movements. Let's see here. What was that? 35 million. And we can just kind of scroll down here and we can see that, again, almost all of the large addresses today have unloaded all of their holdings. 100%, 100%, 100%, 100% 4 days ago, 10% 4 days ago, 100%, what is this, 21 days ago, or 5 days ago. So yeah, this is definitely looking like I wouldn't say there's no evidence that it's coordinated, but definitely this is very, very, very large holders of MATIC selling in sync across this week, which, again, most people should have seen this coming for a while. I mean, you just don't, we're not there yet, guys. If you see an altcoin pump a couple 100%, it's going to dump. It's going to dump hard. We're not there yet. This is not organic growth. These things go up because of FOMO. We're still in a very immature, irrational market. So if you are investing in altcoins for long-term holds and you consider yourself an early investor, an early adopter, you need to get very, very comfortable with these wild swings in your portfolio. And I think that's why investing, for example, set yourself up on a Bitcoin auto pay, invest $25 in Bitcoin per week, and just get comfortable with that. Never sell that Bitcoin, never do anything with that Bitcoin. Stick it in cold storage, set it up on Coinbase, immediately withdraw to a Ledger Nano, and just look and just get comfortable with watching that number fluctuate up and down, because that is what you need to be okay with as an investor. You need to have the long-term patience, 5, 10, 15, 20 years to let the market play out, right? Because investing in the traditional market or investing in anything has shown that those who are patient reap the rewards. Those who dollar cost average and just hold for the long period, those are the ones that win. You can see it very, very clearly with Bitcoin because Bitcoin had multiple 100, 1000% pumps. And if you just held through all of that, you would have had the opportunity to buy Lambos. All right. And now going into, I just want to finish this up with a little bit of technical analysis on MATIC, looking down at the daily, and I don't listen. So please do your own research on this. But I would say that looking at MATIC right now, I would expect this over the next 6 months. Not right now. I think buying right now would be a little inappropriate. But I think over the next 6 months, I think that MATIC, which is a fairly good altcoin, right? Obviously ran up on great FOMO. I would say that obviously we've gone up 100% in one day. I would say that it's unlikely. It's possible. I don't know what's going to happen over the next few days with MATIC, but I would expect over the next 6 months for MATIC to recover and retain stability. So I think that setting some low bid orders down around like 130, maybe 120 sats would not be a terrible idea. You guys use your own stop loss, but I think that a pullback into its previous level of accumulation is not a bad idea. I do expect that MATIC to recover some of its value over this, but we'll see. Again, be slow to move, be patient to move, and make calculated, cunning decisions, guys, to have success in the markets. All right. And let me know your guys' thoughts on this. Do you guys think this is whale manipulation? Do you guys feel that CZ or MATIC is to blame over here? Is there some evidence that these whales were acting in coordination, or is this just what you get in an illiquid market? If you're watching this later on something like a Breaking Bitcoin Bits, make sure to comment down below with your thoughts and opinions, and I'll get back to you as soon as I can. And if you're watching this on the live stream, make sure to throw your comments in here, and I'll get to your questions in the question and answer section of the show following the break. Our next story is coming to us from theblockcrypto.com, and this is going to be on the Ethereum Istanbul upgrade that is now complete. It arrived at block 9,069,000. and it is a system-wide upgrade. It's the third such update in 2019, following the St. Petersburg and Constantinople was Istanbul, not Constantinople. Now it's Istanbul, not Constantinople. So if you have a date in Constantinople, she'll be waiting in Istanbul. I love that song. Moving on. Now, of course, the St. Petersburg fork was to patch a little fudge up in the Constantinople hard fork, but I digress. Now, this represents the latest version of Ethereum 1 point whatever, and it is the network's 8th hard fork to history overall. And these code changes were first approved back in June of 2019. Now, this does pave the way for Ethereum 2.0, which is the network's major transition to proof of stake, which is expected to be coming in 2021. Now, Istanbul particularly includes 6 Ethereum Improvement Protocols, or EIPs, or EIPs, specific code changes to the Ethereum protocols that mainly address the following concepts. 1, DDoS attacks, denial of service attacks, and the resilience of the network. That's EIP 1344. Interoperability, specifically Equihash proof of work, cryptocurrencies like Zcash, that is EIP 152, and the costs of gas as relegated to smart contracts. That's EIP is 1108, 2028, and 2200. So you guys can look up all the documentation for that. Links in the description down below. Now, the most notable change, obviously, to most developers and users of the Ethereum network is going to be the gas costs. Now, the cost to send a transaction on the Ethereum network is called gas, and it is calculated in micro units of Ethereum called GUI, for those of you who are unaware of that. Now, this upgrade lowered gas costs significantly, and the lower gas costs enabled by Istanbul's EIPs are meant to increase the bandwidth of the blockchain and increase basically the support of things like zero knowledge proofs, or to help integrate things like ZK snarks onto the network. Now, this hard fork is considered to be non-contentious, meaning that Ethereum clients universally have not signaled that they will not be upgrading to the code base, and they've all agreed to the new software. However, that's not to say that there are some mixed opinions out there about this particular upgrade, with many believing that this initial move to scaling Ethereum was amateur hour, and that it would break many of the smart contracts currently on the Ethereum network. Mainly, this kind of controversy is centered around Aragon. Now, Aragon is a development. Obviously, it's a token, an ERC20 token on the Ethereum platform. They're building on the Ethereum platform. Aragon CTO Jorge Izquierdo said that Ethereum developers should be more cognizant of developers building on their network. He said, quote, developers don't want to build on a moving target, and backwards compatibility should be taken seriously as well. He says Ethereum's not a toy anymore. It's a platform with a sizable investment base and a big reach. And as such, changes like this need to be professionally measured before being taken. Now, personally, I would say that looking at how Ethereum, I attended San Francisco Blockchain Week. I got to speak with Vitalik Buterin, and I got to hear him give his speech. And this stuff has been announced. This stuff has been known for a very long time. And granted, this code was first approved in June, but it was worked on for a very long time. I think giving developers ample time to update their code bases. Now, of course, unfortunately with Aragon, they had hard coded some of their smart contracts, and that would require them redoing a significant amount of their code base. But this is just kind of what happens sometimes. Ethereum is a moving target. It is a developing blockchain. And this, as we know, in the world of startups, those who are quick and agile and light and able to adapt to responding markets are the ones that are going to be successful. And the ones that, just kind of want to complain and scream at the sky, they're the ones that are typically going to be unsuccessful. So I don't really want to place the blame at Ethereum here. I don't really want to place the blame on Aragon. I will just say that basically my last quote stands on what I've noticed about development here in the startup venture world. Now, another community scare prior to this Istanbul hard fork was regarding the Ethereum primary client parity. And this scrambled to actually issue a patch pre-release. Now, when Parity actually issued the patch to the new Istanbul upgrade, it didn't actually include the interoperability with EIP 1344 concerning opcodes. This was not initially included. So Parity kind of scrambled, and unfortunately Parity is used by major exchanges. It is used by a lot of large mining pools. And so there's always been a lot of fear about Parity not upgrading in time, because if Parity does not upgrade, then there can be a chain split, and that can that can lead to the problem of double spends, because you're going to have two chains without Brain needs words right now. Brain need words. Replay protection without replay protection. So it seems like that has been taken care of. It seems like Parity has pushed that out and is just urging individuals to upgrade if they have not already. I believe that has largely been taken care of. So unfortunately, with many of the most popular Ethereum exchanges making the change, and now ethernodes.org/Istanbul showing that 93% plus of Ethereum clients have already completed the upgrade. Istanbul is clearly here to stay. That means that projects like Aragon, who have not upgraded, are unfortunately potentially going to fall by the wayside. Upgrade or die, guys, because Ethereum is a moving target at this point in time. So let me know your guys' comments and thoughts on this in the comments section down below. If you learned anything, let me know your comments in the live chat. We're going to cover the next two stories once we come back from the break. We're going to take a brief break here, stretch our legs, get some water. Make sure you guys do the same. Maybe do some deep knee bends. You know, go smoke a cigarette if that's your thing, or have a vape, whatever you guys are into. It's totally cool. Clean living's the best for you, but hey, I'm not going to judge. We're going to have a brief word from our friends over at ByBit and our friend Jason again as well. Make sure if you guys are enjoying the content to give us a thumbs up over here on YouTube. Give us a follow over on Twitch or DLive, and subscribe to the channel if you have not already. When we return, obviously back right into the news, but we're also going to be rewarding our followers on DLive by distributing the rewards in our chest, which we will be adding to here during the break, guys. So let us know any questions that you have in the comments or in the live chat while we're taking the break, and the mods will assemble those, and I will do my best to answer those in the question and answer section. Make sure to go check out the Discord at discord.crackingcryptocurrency.com as well while you guys are waiting. So brief word from our friends, and we'll be back in just a moment, guys. This is Jason when he first learned about Bitcoin margin trading on BitMEX.
Why? Why? Give it back! Give it back! Oh, give it back!
This is Jason 6 months later after signing up for ByBit with the Cracking Cryptocurrency referral link found in the description below. Don't make the same mistake as Jason. Sign up today at bybit.crackingcryptocurrency.com. All right, and we are back, guys. So we're going to start off, as I said, with the second hour, getting into the news. But first, I want to reward our viewers over there on DLive by distributing these rewards. So here we go. Hans, by the way, thanks for following today on DLive, and Ritz009, thanks so much as well for following over there on Twitch. And Emmanuel, thank you so much, for the subscription over there on YouTube, my friend. Okay. Whew. Should not have eaten that. Gluten-free snack. Yeah, we decided to go gluten-free. It's kind of like we wanted to have our food just taste worse and be more expensive. Okay. Our next story. Our next story for today, and potentially final story for today, does come to us from China. You know that we talk about central bank digital currencies a lot and their dangers on this channel. And today is no different because according to official Chinese media reports, the People's Bank of China, ye olde PBOC, will begin rolling out testing of their central bank digital currency very, very soon. Their digital currency electronic payment system, or DCEP, or DEP as it's also called, in the cities of Shenzhen and Suzhou. Maybe I pronounced those right. Maybe I pronounced those wrong. Learning Mandarin is definitely up there on my to-do list, but I haven't gotten around to it yet. Now, the People's Bank of China is said to have partnered with 7 state-owned companies to roll out the test, which includes 4 commercial banks and 3 major telecom companies. Reports suggest that the central bank has launched what they call a horse race among these commercial banks, encouraging them to come up with their own implementation strategies. We're going to just give you the money, and it's up to you guys to figure out how to swindle the people into using it. That's on you. But if you don't do it, you're all going to be executed. Okay, cool? All right, good. We're on the same page. Now, the pilot program will concentrate on industries such as transportation, education, commerce, and medical care. Is that an oxymoron? Okay. Now, while some banks have chosen to collaborate with these telecom firms to develop SIM cards with built-in digital wallets, others have built their own independent wallet applications. So far, I would say that independent wallet applications are probably more successful, as we've seen. But again, we have to understand the wave of the future is going to be blockchain on your SIM card, baby. Now, the pilot program, according to Chinese media, the Shenzhen pilot program will be carried out in 2 phases. Phase 1 will be a small-scale testing period running through to the end of the year, followed by a large rollout, including wide promotion across the city beginning in early 2020. It's here, guys. This central bank digital currencies aren't coming in the future. They're going to be here in China right now, very, 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 very soon. Meanwhile, the city of Suzhou is said to be testing the new currency as well. It was reported in November that a PBOC backed fintech company was looking for blockchain and encryption experts in Suzhou. So kind of running to get this implemented because, again, commercial banks are working on developing their own implementation services for this. The fintech firm funded by PBOC's Digital Currency Research Institute is said to be responsible for the research and development of the DCEP, as well as offering support for testing the new currency, making Suzhou now ground zero for testing and development of China's new and aspiring currency technology. Now, also on Monday, one of the largest commercial banks in the country, the Bank of China, announced the issuance of 20 billion yuan, around $2.8 billion, in blockchain-based bonds to small and medium enterprises, beginning that, again, initial distribution of these funds. The bank used its own blockchain system and claims that this is the first bond transaction executed in the country utilizing this new technology. The issuance has a 3.5% annual interest rate, which is actually not bad for a bond. Now, China, I wouldn't hold a government bond, an American bond, but Chinese bond maybe. Now, China is rapidly moving, obviously, in adoption of blockchain technology. And many suspect that Facebook's own cryptocurrency project, Libra, is what prompted the PBOC to move the launch phase up on their planned digital currency. If Libra hadn't announced, this might have taken a few more years to come, but because of the launch of Libra and the outcry against it, they have decided to move very, very quickly, move fast and break things. Now, while the central bank started its digital currency initiative back in 2014, it's like they first heard of Bitcoin and they're like, yeah, make that, but more centralized. It was only recently that the PBOC officials and Chinese leaders began raising the profile of the coming digital currency and blockchain technology as a whole. Now, under the new model for their DCEP currency, commercial banks will first obtain the digital currency from the central bank by depositing renminbi reserves. Users and businesses can then register digital wallets with these commercial banks to use the new digital currency. So essentially, let's just run through that real quick, all right? How does this new system work? So commercial banks deposit the current fiat currency of China, the renminbi, to the central bank, and the central bank gives them back in return their digital currency. So you guys want to talk about cash confiscation? This is how it happens. This is how it's going to happen in America, France, Germany, Switzerland, all of the major countries. This is how it's going to work. This is how it's going to look. They're going to take your cash. They're going to force you to use their centralized digital currency. And we will be grateful that we have something like Bitcoin, that we have something like Zcash, that we have something like Monero, where we can actually transact permissionless without third-party authority or control. Because soon it's going to happen. They're going to confiscate cash. They're going to force you to use their central bank-issued digital sovereign asset, their digital currency. They're going to force you, which is going to be completely monitored, completely controlled. Every transaction you make will be on there. They'll be able to stop any payment of yours that they want. And it seems like eventually the central banks are going to completely edge out the commercial banks. Because what role do the commercial banks play now that we have a central currency? Of course, the same role that they've always played, but now with central authority and management, those things can largely be automated. A more efficient economy, a more controlled economy, and all the dangers that go along with that. Now, with China seemingly taking the lead among nations issuing digital currencies, other countries are moving ahead with similar plans. Last week, France and their central bank governor announced their intention to test a new digital currency in 2020. At a recent joint conference by the European Central Bank, the ECB, and the National Bank of Belgium, an ECB executive board member also commented on the potential of the digital currency, saying that, quote, it could ensure that citizens remain able to use central bank money even if cash is eventually no longer used. What he really means there is, don't worry, guys. After we confiscate your cash, or before we confiscate your cash, we'll definitely make sure that you can use our central bank currency. They're coming for your cash, guys. Just letting you know. Be prepared. So, yeah, I think a good comment on that is, if you want to enter into Bitcoin now, I mean, you've got a couple years. This might take 5 to 10 years. But you want to begin thinking about planning for your future now, while you can still somewhat spend your money freely before everything is central bank digital currencies, and you are unable to make transactions unless you are doing them in person, peer-to-peer, or utilizing cryptocurrency. But what if you're unable to move from central bank digital currencies into cryptocurrencies? They can shut that down. They can stop that. If you want to have the people's money, you might want to start thinking about it now. Let me know your thoughts and comments on this, as well as always in the comment section down below or in the live chat. I'll get to the questions in the Q&A section here in just a few moments. But before we get there, our final story for the day. Now, previously, we talked about the Dash core group and the, quote, exit scam from Mr. MooCowMoo, previous senior analyst or senior advisor for the Dash core group. Now, after months of speculation about the disappearance of the former Dash senior advisor, MooCowMoo, as well as the investor funds he controlled, it seems that he has finally come out and funds are being restored. According to a Reddit post from late last week entitled, Developing Story, more and more people reporting that they are receiving their shares back. Dash users began reporting their funds are being returned and voiced contempt for media outlets prematurely reporting exit scam over the alerted fiasco. One comment read, quote, Moo has finally been woken from his slumber and is currently sending the money back to their rightful owners. Even Aurelian, who was the original user from the Dash forum cited by Bitcoinists last Monday that led to a firestorm on social media, confirmed that his funds had been returned and even apologized for being at the center of this drama, saying, quote, I'm sorry it turned into such a big drama, but I'm also glad that I finally got my funds back. I'm sure some people in the community pulled some strings to make this happen. Thank you, end quote. Another comment read, quote, thank you to all the dedicated and anger-driven investigators and exit scam-yelling news outlets with an irrational hate towards Dash who helped people get their money back, exclamation mark, writes the OP in the Reddit thread. Now, while of course I'm very happy and it is pleasing to hear that investors' funds have been restored, it does lead one to wonder if it was the Bitcoinist investigation article going viral that spurred MooCowMoo to return and do the right thing, or did the Dash team get involved somehow in finding and contacting MooCowMoo in order to lean on him and get the issue resolved? Now, overall, the situation seems to be mostly resolved, with the Dash core group now providing evidence of the funds being returned to investors. This does seem to be, moreover, a case of mismanagement or malfunction on MooCowMoo's end, according to them, rather than an outright exit scam or theft in flight of investors' funds. Now, we've covered a lot of topics on this previously, and although I am very, very glad to hear the investor funds be returned, I am still extremely disappointed in how the Dash core group initially handled this situation. And it is things like this that really make a mark on projects. So I leave you guys open to your own independent analysis of this, to draw your own conclusions, to do your own research, and to please refer to the previous stories that we've done on this concept as well. And let me know your guys' thoughts in the comment section and in the live chat, and I'd love to get to them. With that being said, guys, let's return to the chart of Bitcoin and enter into today's question and answer section. Let's see here. Shout out to the D-Live chest winners today. Forza World TV and Kryptonian. Got some big winners from you guys today. Congratulations, guys. All right, so I'm just going to start scrolling up from the bottom here because I don't see any questions pop in here from the mods. And we'll just take our time to answer these. Let me know if you guys got any questions. Ken D, good to see you, my friend. Rickie Thompson says, they had all of the infrastructure all set and ready to go. Just shows you how far they were ahead of everybody for a Fed coin to go. They were just waiting for the green light. Pablo asks, if I have seen the BTC long on the daily, reaching all-time highs, and the RSI is insane high. Yes, in fact, that was actually the first chart that I had open this morning when we first started the stream. And so let's just go look at that. I think that's a great opportunity for me to talk a little about some fundamental concepts here. So we do have, here are the longs right here on Bitfiniex. As we can see, amount of money in Bitcoin longs is $282 million right now. Again, yes, reaching quite insane levels, not quite all-time high levels on money in longs. That would actually stretch back to the 26th of June, 2019. Let's scroll that out a little bit more. Yeah, actually did reach a new all-time high as far as Bitfinex longs. Of course, this data only going back to April 2018. So we do not have the information on this from prior to that area in time. At least on this chart that I've pulled up at this point in time. Let me see. Could be a reason there. Yeah, still the same date from when this information was reported. And, you know, this is, again, we talked about longs and shorts on a previous episode and my thoughts on this. You know, honestly, this has become somewhat of a meme. This is a metric that's fairly easy to manipulate because there is margin involved here, and obviously not as much margin as something like BitMEX. So if we could see, you know, the longs to shorts positions on BitMEX, we can only see market orders. I think that would be far more manipulatable. But again, typically this is a counter trading indicator. When the longs reach an insane level, they often get smashed down. And if we look at where price is right now, everybody attempting to long the lows, and this is exactly what we saw potentially back in the end of 2018, right before a massive dump down to the downside, down to 3,000. This is exactly what we saw. We saw everybody very bullish, everybody calling the bottom, everybody saying we can't go any lower than 6K, trying to long every, you know, uptick, trying to long every breakout, getting very, very, very excited. And then what happened? Absolute capitulation and collapse. Down to the lows. So typically longs are going to be showing what the popular sentiment is doing, and often popular sentiment is quite wrong. So in my opinion, longs to shorts are often to be counter traded, especially if we look at shorts here as well. We can see shorts dumping positions. But again, if we same kind of concept. What are shorts? Shorts are at an all-time low. Longs are at an all-time high or approaching an all-time high. And we know that the popular sentiment is often very, very, very wrong. Often very wrong. So what do you guys think? And here's the longs to shorts ratios. It is at 5.7906. The longs to shorts ratios is at an all-time high. So we've never seen more longs than shorts relative to each other. Honestly, this doesn't look very healthy for a bullish breakout for me, guys, because with everybody trying to long the market, it's unlikely that it's going to go up. But again, we've seen things like this happen before. We saw a lot of individuals longing the market down at 3K. We saw the longs to shorts ratios begin to get slightly counterbalanced, but BitMEX funding tended to disagree with that because BitMEX funding was extremely negative during that whole period, and a lot of traders did get smoked on that explosion on April 1st, which led to that short squeeze scenario, and that increased ramped up volatility with a lot of market buying, of course, happening. So overall, I would look at this as a counter trend trading indicator, but it's not really factoring into my primary analysis, except strengthening. It's like a tertiary concept that is strengthening my fundamental bias to the downside, which is just based off mostly hash rate, mostly market structure, mostly my monthly signal, my weekly signal, and just my technical analysis, which tells me that price is statistically likely to go much lower to the downside than it is likely to go up. Again, I pointed out that area. We might see that pump up to 8K, but be very, very surprised to see price above that. And if we do see price above that on a consistent basis, That's a good thing, guys. It means we're wrong. It means I'm wrong, anyways, with my analysis, because you guys might disagree with me. And if this is the local bottom for Bitcoin, then that means this is a significant bottom. This was just a pullback after that blow off top, and likely means we're going to see higher highs, potentially for the year or for 2020. And that's a great thing. We don't need to buy the lows to make money on Bitcoin. We can wait for the trend to reestablish bullish and then ride that trend. That's what we do. Market tops and bottoms are for speculators and for institutional investors. And if you're not one of those, don't try to trade like one. Similar to this, I did want to go give you guys an update on the hash ribbons indicator. As you can see, we are still in the throes of the minor capitulation, which began here and is still carrying on today. Hash rate has not risen above difficulty level. Going down to BitMEX funding. It'll take a minute to load. All right. Let's zoom out here. What is BitMEX funding right now? It is positive. Does the market tend to move up when BitMEX funding is positive? No. Let's go look at the last time BitMEX funding was sustained positive. Let's see. Starts here and ends here. So everybody was trying to long this entire movement. And it wasn't until funding flipped negative here for a while the price actually began moving up. But now we're right back in that same scenario, guys, where funding is positive again. And what is happening? Price is not moving up because everyone is trying to long price. Here we go. Another example of funding being positive and what happens. Huge stop run. Here we have another great example. Funding is positive. Starting here. And what does price do? Does not go up. Now let's look over. Let's go look at when funding was quite negative. Look at how many people were trying to short Bitcoin right here. And what did it do? Looks like a steady march up to a breakout to me. Let's go back to the lows. Here we go. This whole area is pretty good. Look at how many people were trying to short Bitcoin from here. That makes sense. November obviously makes sense. But throughout all of November right here, throughout all of the early 2019, everybody is trying to short Bitcoin. And what did price do? It screwed them. And then when everyone was trying to long Bitcoin and we see outliers here, big spikes, often price moves down. Outliers lead to converse price movement. So funding is relatively low, but the sentiment is still there. Everybody is still trying to long Bitcoin, and longs to shorts ratios is extremely high. This doesn't look good. We're still in the throes of minor capitulation. No bueno. Kryptonian asked about keyboard shortcuts in Pine. Could you let me know, please, what that specific question was, my friend? Kryptonian 100x short on both accounts. Tyler Z says, what makes Wada-Atar a line cross indicator? Is it when the candle crosses above the explosion level? Yeah, so the way that it's plotted here, the way that Wadatar is plotted here is as columns, right? As kind of like a histogram. But what we have to understand is that those columns is just a line. It's just a visual representation of a calculation, right? So we can change columns to line, right? And we can change downtrend to line, right? And we can see that if the explosion level is our line, it becomes very similar to the visual layout of something like ADX or a rune or something like that, where you have a green and a red line that are bullish or bearish momentum, and then you have this line which represents volatility. So when the bullish volatility rises above when bullish momentum rises above our volatility filter here, then that is a signal to go long. And when our bearish volatility rises above, that is a signal to go short. It is just aesthetically plotted as columns, because that is often easier for people to trade with, and how I like it. If I want to use it as my initiator, would you recommend not using a different line cross initiator for the confirmer? I generally am going to recommend that you find something that is either a centered oscillator or a dynamic centered oscillator or a chart overlay. But you can if they have different sensitivities, and potentially if they measure different, if they're doing different calculations of momentum. But I'm not going to stop you if you find something that works very well. Your backtest is going to reveal all that. Ken D just needs a good link that tells you how to create a paper BTC wallet. There you go, my friend. Does people using Bitcoin for the dark web affect the market? Yeah, I mean, potentially. If people are getting paid a lot of Bitcoin and then looking to sell that, yeah. If you can program a key to act as a change to, let's say, flip from short to long, take profit lines, not to the best of my knowledge, sir. Peckham says he watched that Silk Road doc. Wow, epic, one of the very best I've seen. Thanks for the recommend. Yeah, it was good. It's one of the best that I've seen lately. I would second the comments about the Ledger Nano X. Ledger Nano X and a crypto tag for the win. For the win, guys. Giving a shout out here to Da Vinci, Midwest Attempt, Zulu Crypto Surfer, Abby Normal, Jap, MT Coiner, Saintsy, Stephen Hyatt, Rob G, Agency, Alpine Whip, Forza World TV, Moonshine, Fuel, Jose Canetta. Matic got carpet bombed? Yeah. Strength and profit to you as well, Scrooge. Good to see you, my friend. First Matic, next XRP. Justin is the official face of XRP. If I was the, that would make sense. Like if I was the official face of XRP, that's probably why the market's doing what it's doing. Thanks, Andrew. Love having you, my friend. Hopefully you're having good luck on in the Forex markets today, my friend. Thank you, Kryptonian. Highly appreciated, my friend. Don Candon says, come on, Justin. We know you are Satoshi. Enough of the smoke and mirrors. Tell us when the next time all-time high in price. 27,000. No, actually, the next all-time high is going to have to be 42,743. November 17th. November 17th? Is that a word? 17th? I should definitely probably TM that. November 17th, 2021. Go write it down. Boglu says he went long at 7,500 and it dropped right after. Is that why it dropped? Ritz, good to see you, my friend. MATIC got raided, yeah. Are all my charts on Bitfiniex? No, absolutely not. This is Coinbase right here where I like to monitor Bitcoin's price action. Have I seen ZERP oozed today? I saw it. I didn't see anything that impressed me. I mean, you know, all the dollar pairs look like Bitcoin. I've said that for a while. We've got, you know, here's XRP USD, here's ETH USD, here's LTC USD, here's EOS USD, here's ADA USD. They're all following the king, my brother. "24 frames a second likes the RTM strategy with the VPVR, my friend. Alpine Whip, chopping wood in the snow, listening to Justin. I live in a perfect world." Nano doing a good sale on the new Nano X and Nano S both for £163. Good deal. All right, guys. Doesn't seem like we got a whole lot more questions. You guys have been absolutely fantastic. I'm not going to keep you. You guys have got a lot of stuff to do. I've got a lot of stuff to do. You guys are beautiful. Don't ever forget that. Thank you guys for joining me for another exciting episode of Breaking Bitcoin. You guys have been absolutely fantastic. Thank you again so much for joining me today. If you want to support what we're doing, make sure to leave a like on the YouTube video. Give us a subscription with the bell because we are here Monday through Friday from noon to 2 or noon to the show end, Central Standard Time, 1 p.m. on the Eastern Seaboard is when we start, guys. If you guys have any questions, comments, concerns, sarcastic remarks, or death threats, make sure to leave them in the section down below, and I will try to respond to you within 48 hours if it is a question, or let you know how much I appreciate you if it is otherwise. Let's see here. Something fun. If you guys leave a comment down below, guess, what is Bitcoin's closing price going to be tonight? And whoever is closest tomorrow, I'll review the comments tomorrow during the show, and whoever is the closest will win the crypto comment giveaway challenge. So get cracking, guys. Let me see your best guesses. Let me see who among you is the true Nostradamus. Other than that, guys, If you guys would like to support also what we're doing, make sure to check out the podcast at breakingbitcoin.money. Leave us a review if you enjoy the show. It really does help boost our numbers out there for the algorithm gods. If you guys would like to trade along with us, if you'd like to have access to our proprietary strategies, our indicators, our premium Discord community, if you guys would like access to our educational content, as well as how to build your own technical strategy from the ground up, position sizing, risk management, our premium webinar series, make sure to check out what we're doing at premium.crackingcryptocurrency.com. We are the fastest educational group with, in cryptocurrency on the interwebs at this point in time. And I'm really thrilled to be on this journey with you guys. All of you are absolutely fantastic. Thank you all so much for the support. As always, I will see you tomorrow. Look forward to another Breaking Bitcoin Bits dropping tonight at 6 p.m. Central Standard Time. And until I see you guys tomorrow, trade safely.